Hello traders. The title of the video is a second step to a practical use of Elliott wave and predictive fractal pattern as a technical trader. Have you watched the first part? Well, let's continue with this discussion about combining a practical combination of Elliott wave principle and predictive fractal pattern. All right. So I need to remind traders that what we are trying to do is to gather, the knowledge, and then be able to understand it, and then start practicing until, we gain the skills and the experience that will allow us to make excellent trading decision, excellent market forecast, combining the Elliott wave principle and the predictive fractal pattern. It will not happen in one day. So what I'm trying to do, I'm trying to share my tips and tricks with traders. So I would like traders to support me in that case. Put your comments, ask questions, and so on, or give us feedbacks, as I'm trying to share with you, my tips and tricks that can be useful to you or help you, to become a better Elliott wave trader, Now, talking about practical use of Elliott wave and predictive fractal pattern as a technical trader, step 2. What we want to do, we want to break it down as a daily chart trader. Are you a daily chart trader? You want to use now, you are all the time on the daily chart. You say, George, I love the daily chart, and many traders do love the daily chart. Practically, George, how do I use combine the predictive fractal pattern and the Elliott wave principle? What you need to do, your number one time frame will be the 3-minute time frame. You will be looking for the multi-waves. You will be using the structure or the pattern of the multi-wave of the 3-minute time frame, to focus, first the hourly time frame, and you will use the multi-waves or the corrective wave of the hourly time frame to focus the daily chart. So you, as a daily chart trader that always use the daily chart, you are looking for predictive fractal pattern, talking about Elliott multi-wave. You are looking for Elliott wave cycles, Elliott wave patterns on the 3-minute time frame. Those are the time frame, 3 minutes, hourly time frame. You are constantly using those structures as a predictive fractal pattern to predict, to forecast what is likely to take place on the daily chart. So when you identify a predictive fractal pattern, can be directly from the 3-minute time frame, that pattern may be duplicating itself straight away on the daily chart. Sometimes the pattern, you may see first a trending first, a multi-wave, on the 3-minute time frame, and then a correction. That's an Elliott wave cycle that will be completed first on the 3-minute time frame. You will be surprised. As that Elliott wave cycle is completed on the 3-minute time frame, now it will expand itself onto the hourly time frame. So therefore, what you're going to see is that the trending phase or the multi-wave that you see on the 3-minute time frame will now become the first wave on your hourly time frame. And the corrective phase that you see on the 3-minute time frame will now become the second wave on the hourly time frame. The same thing can happen again when after you have seen the first and the second wave, after you have seen a multi-wave and a corrective wave. Am I trying to say? So when a cycle is completed on a 3-minute time frame, an Elliott wave cycle is completed on a 3-minute time frame, that Elliott wave cycle will form the first and the second wave of the hourly time frame. When an Elliott wave cycle is completed on the hourly time frame, that will form the first and the second wave on the daily chart very often. So the cycle is in first and second wave. So a cycle is completed 3-minute time frame. That may, I'm choosing my word carefully. You will see a lot. Don't take it like an exact science. The reason why I'm saying that, because some traded, that's the way they learn. There's nothing like 1 + 1 = 2 in the financial market. We talk about Elliott wave validation. Check it out at 24elliottwaves.com. We talk about higher degree wave count. I will not go back again. Blah 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 blah. All right. And so when an Elliott wave cycle is formed on the 3-minute time frame, we see it as first and second wave of the hourly time frame. When we see an Elliott wave cycle on the hourly time frame, we see as first and second wave of the daily chart. Now, with that information, because we are talking about predictive fractal pattern, we are not limiting ourselves to the Elliott wave pattern alone, or to the Elliott wave motive wave alone, or to the Elliott cycle alone. We are using also normal pattern. Can be funny pattern, can be any price structure that we can see that it's a pattern. That pattern can move itself from the 3-minute time frame and pitch itself on the hourly time frame, and go from the hourly time frame, bring it to the daily chart. So those are the 3 time frames that you want to check: 3-minute, hourly time frame, and the daily chart in a nutshell. We will be doing more demonstration of this, so I'm giving it to you now as in a classroom. Think of it, digest it, start playing with it. Don't use real money. They try to look around and see what's making play. Because what is usually taking place, generally speaking, a trend is beginning. You will start, maybe you will see on the 3-minute time frame. Boom, 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 1, 2, 3, 4, 5. So that's why sometimes TSTW24 traders sometimes have problem on the first best time frame. So they see price going up, all right. The indication that is going to be bullish, there will be a correction. There will be a correction. And if you try to buy during that time, because you may get into trouble, so you lose first, and the price go back, and they say, oh, it's becoming bearish. And then maybe the next day, or sometimes you will see, like on a daily chart, like I'm saying to you, 3-minute, hourly. It's not the same day. Sometimes you may see now, for instance, on the hourly time frame, it will happen today, and then you jump on it. But the price may slow down, so you may have something, so you understand you need to be careful, because you may see trending fair, correcting fair neatly like this on the hourly time frame. Then you go to the daily chart. You are expecting the next day to start rolling it out, forming a third wave on the daily chart, and it will not happen. You will have instead a prolongation of the correction, which means you have a complex correction, and then you say, oh, George, this is not working. But a correction can be complex, all right? So just be aware of it. So a trending first, a correction. Sometimes it will be very easy for you to see that it goes up, it pulls back on the 3-minute time frame, you catch it. The continuation will the price will resume the bigger cycle on the daily chart. You move to the 3-minute time frame, and then you move to the hourly time frame, and then you see where are we now in relation to the hourly time frame. They may be, but sometimes the correction may be prolonged due to economy news, other things. You see blah blah blah, or print something, or come back down again, completely cancelling, okay, the trending phase that you have seen on the 3-minute time frame. So if that is the case, you will go back again to the 3-minute time frame to see a new trending phase. If, for instance, you see trending phase on the 3-minute time frame, correction on the 3-minute time frame, now you move to your hourly time frame, expecting a continuation, and now the price come back down again, coming to the beginning. See, Joe, what were you talking about? It's not happening. But use a top-down trading method. It's not magic formula. So, but the point I'm making is that if you happen to cancel it, then you go back again to the 3-minute time frame to see whether there will be a new trending fair and a correction. Because if there's a cancellation, we'll start counting wave, as we did talk about it before. So those are your time frames. So you do exactly the same thing again. Hourly time frame, moving it to the daily chart. But what we are doing, because we are talking predictive fractal pattern, we are talking about a pattern that is already formed on one time frame that is likely to be formed on a higher time frame, or a pattern that is expanding itself or duplicating itself, or a pattern that is propagating itself, or a pattern that is dominating. Okay, all right. on different time frames. So this is about a video that I recorded earlier on, which I'll be posting at 24 Area Waves YouTube channel, that we titled Revealing in a Nutshell, a step-by-step practical area wave forecast using fractal. In that video, I listed 7 steps. So that video is so important to anybody that is watching this one. Let me tell you again the title, Revealing in a Nutshell, a step-by-step practical area wave forecast using fractals at 24 Elliott Wave YouTube channel. So those are the things that we are looking for when we are talking about practical area wave trading. All right? I'll come back to that again, so I'll give it to you now. You have a bit of a journey. Now that's the knowledge, all right? We'll come back to practical bill later on in various videos, so take it from me. I want to talk now to somebody who is using the monthly chart. So you say, George, I'm like you, I use the monthly chart. What should I be looking for? So for you as a monthly chart, swing trader, or whatever you do on a monthly chart, or you combine the monthly chart and the 50-minute, whatever you do, to combine the area wave principle or area wave price structure, area wave cycle, area wave trends, or normal pattern with predictive fractal pattern to forecast the market. You will start like somebody on a daily chart, but you're going to extend your move a little bit higher. So you're going to go 3 minutes, hourly time frame, daily chart, and then before you reach your monthly chart right there. So 3 minutes, hourly time frame, daily chart, and then monthly chart. That's how you're going to go. So you'll be scrutinizing the 3 minute time frame, looking for price structures, area wave, multi-wave, all right? Looking for area wave cycle on the 3-minute time frame, using it as a predictive fractal pattern for your monthly chart, all right? A pattern that is expanding itself, all right? Okay, that's what we are talking about. You will be checking also area wave cycle, area wave patterns, area wave trends on the hourly time frame, using them as a predictive fractal pattern for your monthly chart. And you will also be checking for patterns on the daily chart, using those patterns, okay, area wave trend, area wave cycle, and so on the daily chart, and using those as your forecasting tool for your monthly chart. So there is a correlation between the 3-minute, hourly, daily, and the monthly chart. That's how you will be playing it. So those are your time frame. So you go one step higher than the daily chart trader that is a bit lazy, doesn't want to look on a monthly chart, but you want to say, no, I want to go to the monthly chart and see the bigger picture. Those are the things. So an area wave, okay? So for instance, you may see now that a trend is starting. So you see first. Not always, huh? You see first on the 3-minute time frame. Now you see 1, 2, 3, 4, 5, and then the correction. The correction can be simple or prolonged. But the most important is that there was a trend and there was a correction. Okay, now you go to the hourly time frame. You see probably this is the end of the second wave on the hourly time frame. And then again, it starts going up again. So on your hourly time frame, the price is going to start the third wave, isn't it? Yeah, because the cycle of the 3-minute time frame is forming the first and the second wave. In theory, things can be sometimes a bit complex, my friend. So you are expecting the third wave. So the third wave is underway on the hourly time frame, but that third wave can be subdivided into 5 waves. So as that is taking place, that third wave is beginning on the hourly time frame. You will see also on the 3-minute time frame, you see a new trend again on the hourly time frame. But that new trend that you are seeing on your 3-minute time frame is part of the third wave of the hourly time frame. All right. Now the third wave on the hourly time frame is now completed. There will be a 4th wave on the hourly time frame. Yes or no? Because the trend move now from the trend is still in place, but it just you see it first on the 3-minute time frame, then it moved to the hourly time frame. Now you have your third wave on the hourly time frame. Then you're going to have a 4th wave on the hourly time frame, all right, and so on. And then you have the 5th wave on the hourly time frame. But as you see again now, anytime we see first, now once the 5th wave, now this is very important. Once the 5th wave, this is why you have to know when you need to move to the next time frame. Once you see a 5th wave on any time frame, you need to move to the next time frame. So if a fifth wave is completed on the hourly time frame, it means that a trending phase is completed on the hourly time frame. That trending phase will be equal to a certain degree to an impulse wave on the daily chart. When we see that a fifth wave is completed on the daily chart, it means that we have first wave, second wave, third wave, fourth wave, and a fifth wave on the daily chart. That's a multi-wave on the daily chart, yes or no? That multi-wave on the daily chart, in theory, should be equal to, all right, an impulse wave on the next time frame, which is the monthly chart. So the trend is expanding itself on various time frames for different levels. But anytime we reach a 5, we need to go to the next level. So the same way, we can look for those Elliott wave cycle, price structure, Elliott wave pattern, Elliott multi-wave structures, and use them from one time frame to the next time frame, practically speaking, to forecast what the price is likely to do on the next time frame. So the structure of the cycle that we see on the 3-minute time frame will help us to forecast the structure of the hourly time frame. The cycle of the structure of the cycle of the 3-minute time frame is helping us to forecast the structure of the cycle of the hourly time frame. And the structure of the cycle, Elliott wave cycle of the hourly time frame, we can use it as a predictive fractal pattern to forecast the cycle on a daily chart. And we can use the structure of, and so on, and so on, and so on. The structure of the cycle of the daily chart to forecast the structure of the cycle of the monthly chart. But remember this, we can use the cycle of the 3-minute time frame straight away to forecast the cycle that is happening on the monthly chart, because it's a fractal pattern. That pattern that you see on the 3-minute time frame, you may not see on the hourly time frame, you may not see. We are talking about now about the predictive fractal, not the Elliott wave cycle itself. The pattern, the structure that you see on the 3-minute time frame may copy itself straight away onto the monthly chart without you seeing it first here. This is about predictive fractal pattern, a structure that is expanding itself. So it goes from one lower time frame and then goes straight away to a higher time frame. But it can go steadily. When you will see, you can use it to focus in the hourly and then go to the daily chart and the daily chart to the monthly chart. But it can be that you may know it may not be useful to you on the hourly time frame or daily chart, but you just save it. But later on, you may notice that that pattern that you have saved for a long time is now happening on the monthly chart, or it's now happening straight away on the daily chart without seeing it first on the hourly time frame. So for somebody who is using the quarterly chart, you say, John, talk to me, please. I'm a position trader. How do we, practically speaking, talking about the second step of a practical use of Elliott wave and predictive fractal pattern of Mr. Benoit Mandelbrot as a technical trader? John, speak to me, please. I'm a quarterly chart trader. For you, what you need to do, my friend, your time frames are a little bit different. You will use, 15-minute time frame. That will be your first time frame, your first lower time frame. And then you will use, the 4-hour time frame. And then you combine it with your quarterly chart. But remember that if you are talking about 4-hour time frame, if your charting software does not allow you to see the 4-hour time frame, you can use 2-hour time frame instead. Better. You can use also the 3-hour time frame. So you can go 15-minute time frame, 3-hour time frame. The structure, as I described it to you already, I don't want to repeat myself, looking for those predictive fractal pattern, 15-minute time frame, combining it with the 3-hour time frame or 2-hour time frame or 4-hour time frame, using either the Elliott wave cycle, Elliott wave trend, Elliott wave pattern, normal funny patterns, or on a 4-hour, 3 hours, 2-hour time frame. We can also use them as a predictive fractal pattern to forecast what is likely to take place on the quarterly chart. But as I explained it to you earlier on, I need to mention it one more time, all right, is that a pattern may appear on the 50-minute time frame, and that pattern will quickly copy itself, not on the 2-hour, 4-hour or 15, but straight away on the quarterly chart. So the structure, the predictive fractal pattern on the 3-minute time frame, we can see them on the quarterly chart. We can use that to focus straight away the quarterly chart. Sometimes it will progressively expand, which means you see first on the 50-minute time frame and then on the 3-hour time frame or 2-hour time frame or 4-hour time frame before we finally come down here. But nothing can stop it. Well, sometimes you may see only first time on the 2-hour time frame, and then it's now going to the 4-hour time frame. It doesn't mean because you see a predictive fractal pattern that the pattern will definitely occur here. And when we are trading it, we are using it as a guide to focus the market. It's an expectation. It's not an exact science. All right. We are very careful, and we will always use a top-down trading method. You want to buy. You want to make sure you are buying at the resistance level. You want to buy at the support level. You want to sell. You want to sell at a resistance level. Don't forget everything else, all right? And then you are using a new trading strategy, which we are talking about combining area wave and fractal, and then you forget about everything else, which means trading on the edge, use pitchfork tool, draw your channel to not violate the market, use a top-down trading method, all right? This is the thing that you need to do, all right? So 15-minute time frame, either 2 hours, 3 hours, or 4-hour time frame, and the quarterly chart, all right? The pattern may expand, which means from a lower time frame to a higher time frame, or a pattern may go from a 50-minute time frame straight away to the quarterly chart, or straight away from the 3-hour time frame to the quarterly chart. The reason why I mentioned 2 hours, 4 hours, 50-minute time frame, the reason why I mentioned 2 hours time frame, 4 hour time frame, and 3-hour time frame is that sometimes you may go to the 2 hour time frame, you may not see the pattern clearly, but maybe you change time frame like a TC2000 software I'm using here. I can see 3-hour time frame, and you go to a 3-hour time frame, you can see the pattern neatly, beautifully, clear, and more clearer to you on the 3-hour time frame instead of the 4-hour time frame. That's why I'm mentioning 2 hours, 4 hours, and 3-hour time frame. So they are all in connection with the quarterly. I highly recommend the 3-hour time frame, for quarterly chart traders, which are position traders, So you may say, George, I'm a weekly chart trader. You have forgotten me. You talk about daily chart. You talk about quarterly chart. What's wrong with you, George? Are you forgetting me? And then I will say to you, no, my friend, I did not forget. Who said I have forgotten you? No, I did not forget you. For somebody using the weekly charts, all right, you want to use 15 minutes. So you see now, 15-minute time frame. I think we forget something. Yes. We forget something for the quarterly chart. Attention, please, traders. What I've said so far is correct, but I just need to mention that apart from the 2 hours, apart from the 2 hours, 3 hours, and so on, there's one more time frame that we need to put before the quarterly chart. All right. Here it is. This is weekly chart or 3-day chart. So let's go back again. Quarterly chart traders, let me speak to you one more time. 15-minute time frame, 3-hour time frame, all right? Weekly chart or 3-day chart, and then quarterly chart. So we forget the weekly chart and the 3-day chart. All right? So you can go like this: 15 minutes, 2-hour time frame, weekly chart, quarterly chart. Or you may go like this: 50 minutes, 4-hour time frame, weekly chart, quarterly chart. Okay? You can go like this: 50 minutes, 3 hours time frame, 3-day chart, all right? Quarterly chart. Or you can go 50 minutes, all right? Any of those time frames, 2 hour, 4 hour, or 3-hour time frame, all right? And then go weekly chart, and then quarterly chart, all right? So somebody who said to me that, George, I'm a weekly chart trader, so all you need to do, you're going to say 15 minutes, all right? Either 2 hours or 4 hours, not 3 hours, all right? So weekly chart trader, it is 15 minutes, either 2 hours or 4 hours, and then your weekly chart is right there. That's it for a weekly chart trader. This is practical. So you are looking for predictive fractal pattern first on your 50-minute time frame, and then you combine them with either 2 hours or 4-hour time frame, and then before you relate them to the weekly chart. As I explained to you before, you may see the pattern on the 50-minute time frame, and that pattern will copy itself straight away to the weekly chart. It does not have to go first through the 2-hour or 4-hour time frame before heading to the weekly chart, but sometimes the pattern may be expanding itself, which means you may see it first on the 50-minute time frame, and then 2-hour or 4-hour time frame, and then you'll see it nicely on the weekly chart. But we can play it other way around, where you will see it first on the weekly chart before it will break backwards, which means from the weekly chart, and then it will dominate. This is what we call dominant pattern. It forms first on the higher time frame, and then we'll come back to the lower time frame later on. All right, this is for a weekly chart trader, 15 minutes, okay, 2 hours or 4-hour time frame, and a weekly chart. So you may say to me, George, I'm a scalper. All right, can we use this for scalping? And I'll say to you, when you are using this for scalping, be very, very gentle. Now, let me take a pause for a second because to get something to drink, and I'll be back in a minute, okay? So pausing the video for a minute, and we'll be back very shortly. Thank you, traders. Let's continue our discussion about the second step to a practical use of Elliott and predictive fractal pattern as a technical trader. All right? So if you are a scalper, you want to combine the Elliott wave theory and the predictive fractal pattern. Practically speaking, how do you use it? Okay. So there are many ways we can play with it, but all right, that will be a different series of video where we can talk about this: scalping, day trading, swing trading, position trading, and we'll come back to all this. But what we are doing today is about accumulation of the knowledge. We take it away, we digest it, and we start playing with it gently, okay? All right, so as a scalper, so very quick, in a nutshell, I may say to you, all right, you may disagree with me, you can combine, you can look for the predictive fractal pattern first on the 1-minute time frame. Personally, I stay away from the 1-minute time frame because I have so many losing trade on the 1-minute time frame, so I stay away from it. My lowest time frame that myself I use is the 3-minute time frame, so I need to mention that, okay? I may go sometimes to 2 minutes, but all right, remember that. So for scalpers, there are traders out there that are die-hard scalpers. They will go to the 1-minute time frame, and they will look for Elliott wave cycle. All right. Elliott wave trend, Elliott wave multi-wave, Elliott wave pattern, or normal price stretches. Anytime I'm on the 1-minute time frame, I want to get away from it, all right? But some people use it, all right? And then you will use either the whole Elliott wave cycle that you see on your 1-minute time frame, the structure, all right? You understand the structure, how the price move, looking inside the price, and you will use that as your predictive fractal pattern. Apologies to traders, my voice off. And you will use that as a predictive fractal pattern. All right? So as I explained to you at the beginning of this video, talking about 3-minute time frame, trend beginning fast on the 3-minute time frame. So the same thing. So you see an Elliott wave cycle on the 1-minute time frame. That Elliott wave cycle will constitute the first and the second wave of the 15-minute time frame. Normally, if we want to be exact, we should combine the 1-minute time frame with the 22-minute time frame. But because not many charting software, have the 22-minute time frame, the ratio is 1 to 22. So therefore, practically speaking, we can combine 1-minute time frame and the 15-minute time frame. So we are using the Elliott wave cycle of the 1-minute time frame as the first and the second wave of the 15-minute time frame. Now, understand that things can become sometimes very complex when we have a complex Elliott wave or we have an Elliott wave extension. So you may see the structure like this, you think that it's finished, 1, 2, 3, 4, 5, and behold, the fifth wave is being extended, or maybe what you are calling the fifth wave, all right, is something else, or that fifth wave is part of a third wave that's been extended. So which means first wave, second wave, first minor wave of the third wave, fourth minor second minor wave of the third wave, third minor wave of the third wave itself, and then you have a fourth minor wave of the third wave, followed by the fifth minor wave of the third wave before the real fourth wave and the real fifth wave. So I understand that things can become a bit complex sometimes when we have wave extension or we have complex correction. But in theory, generally speaking, the Elliott wave cycle on a 50-minute time frame, in theory, should be equal to the first and the second wave on the 50-minute time frame. But because we are talking about predictive fractal pattern, we are looking for a specific pattern or the wave structures on the 1-minute time frame. We want to use that as a blueprint, as a working tool, as a guide to help us to have a bit of idea what is likely to take place on the 15-minute time frame. You'll be amazed sometimes when a structure that is already in place on a 15-minute, on a 1-minute time frame is now expanding itself to the 15-minute time frame. As always, this is a very beautiful topic, and it takes a bit of practice. So you may learn it now. You start jumping on it. Don't jump on it, my friend. Digest it. Use a demo account, especially when you are talking about scalping. You are competing with the best computers out there, best algorithms out there. Where are the support level? Where are the resistance level? Pay attention to the market patterns. All right. So for a scalper, if you want to push it even more, some people can see if you if you can go to the 3-second time frame. People do that. There are traders trading on the 10-second time frame, and they will say, "George, give it to me, give it to me." You go 3-second time frame. Look for what we have discussed already, the pattern, the structures on the 3-second time frame, and then use that as your predictive fractal pattern for the 1-minute time frame. And then from the 1-minute time, use the 1-minute time frame structure to forecast the 15-minute time frame. One can use even the 3-minute cycle or predictive fractal pattern on the 3-second, not 3 minutes, 3-second time frame of price structure. One can use that to forecast what is likely to take place on the 15-minute time frame. So this is for a scalper, all right? So you say to me, Joe, you haven't talked about somebody using the yearly chart. I'm an investor, and I don't care about the yearly chart. In that case, you're going to join those who are using the daily chart or those who are using the monthly chart. So for somebody on the daily chart, you can start all the way from the 3-minute time frame, 3-minute time frame, hourly time frame, daily chart, monthly chart, and then yearly chart. Because normally we should say 22-month time frame, but because we don't have 22-month time frame, we are using the yearly chart. So you will say 3 minutes. The exact corresponding time frame for the 3 minutes is what? 66-minute time frame. Because we don't have 66-minute time frame, we are using the hourly time frame. Now, the hourly time frame, we should connect it 22-hour time frame, but we are using the daily chart. That's fine, practically speaking. Now, in the daily chart, we should connect it 22-day time frame, but we want to use the monthly chart. And the monthly chart, because we don't have 22 months, we use the yearly chart. So for somebody who wants to play with the predictive fractal pattern, those are the time frame that you will use, 3-minute, hourly time frame. So a predictive pattern that is formed on a 3-minute time frame can even copy itself all the way to the yearly chart. And the yearly chart predictive fractal pattern can dominate the 3-minute time frame. All right. So an Elliott wave cycle may begin from the 3-minute time frame, and one can follow it all the way to the yearly chart. Isn't it beautiful to do that? But it doesn't happen all the time. You may see many changes because sometimes we have major economy news, things can go upside down. Second wave may cancel, all right? The first wave, either on the 3 minute, even on the daily chart, even on the monthly chart, which means we go back. So if we cancel it on one time frame, you go back one time frame. So you see, it's becoming a bit longer. That's what I'll say to you. There are so much we need to share with traders, tips and tricks about this practical use of combining Elliott wave and the predictive fractal pattern. And we will go bit by bit, and in each video I will be coming back to things that we are sharing here. That's what I'm saying to you. Now we are in a classroom. We are learning the theory. What we need to do, we need to know it first. And then we go out. It's like a salesman. They sit in the classroom. They train them as a salesman. And then they digest that knowledge. And then they must now go out, okay, to pitch to customers, yes or no. But they will not become a best salesman today, in one day or in 1 week. But by practicing, they will meet all kinds of crazy customer out there. People will shut the door in their affairs and so on, and then they will improve their skill until they become the best salesman. The same thing we are doing here, practical Elliott wave forecast using the predictive fractal pattern. So I don't want the video to be too long because it's already too long. We go over our 30 minutes. If you have any question or suggestion, or put in the comment section, and in due course, I will be recording another video to answer your specific question. Talking about the second step to a practical use of Elliott wave and predictive fractal pattern as a technical trader, all right? A daily chart trader can combine 3 minutes, hourly time frame, and daily chart. A monthly chart trader will go 3 minutes, hourly time frame, daily chart, and a monthly chart. A yearly chart trader may go 3 minutes, hourly time frame, daily chart, monthly chart, and a yearly chart. A quarterly chart trader may go 15 minutes, either 4 hours, 2 hours, a 3 hour time frame, and weekly chart, then the quarterly chart, okay? And then a weekly chart trader will go 15 minute time frame, 4 hours, or 2 hour time frame, then the weekly chart, okay? So for the quarterly chart trader, we say instead of the weekly chart, you can also use 3-day charts. For somebody who is scalping, one can can even go push it too far, or you can just use 1 minute and 15 minute time frame. But if you want to push it more, you can go 3 seconds. Wow. And then 1 minute and then 15 minute time frame. All right. The discussion about predictive fractal pattern on its own is going on at the Pro Trader YouTube channel, but talking about combining the Elliott wave theory and the predictive fractal pattern to forecast the financial market as an Elliott wave trader is taking place at 24 Elliott Wave YouTube channel. The Elliott wave patterns are fractal pattern. The financial market is fractal, okay, and one cannot escape the predictive fractal pattern. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. Your feedback is very important for us, okay? It will help us, okay, to dig more into these essential topics, so we may record, okay, more essential tutorial, all right? If this video has been truly useful to you, let us know by, okay, giving us the thumbs up. If you think that, George, I'm not impressed, it's another blah blah blah, okay, let us know by marking it down. But if you think this is an essential tutorial, feel free to share with your friend on Google Plus, on Twitter, and also on Facebook. If you have not yet subscribed to our channel, this is the moment. Subscribe to our channel, please, all right, and make sure you click on the bell icon, so anytime we record a video, you'll be notified, okay? And in your own time, you may decide to watch it or not to watch it, okay? Happy trading to you all, and I will speak to you soon. We are the TSTW24 traders, talking about second step to a practical use of Elliott and predictive fractal pattern as a technical trader. Happy Easter to you, and enjoy yourself and be very happy.